Yeah, we have this term we've coined, core with a scratch, right? So we're trying to find stuff that should be core, maybe has a lease length issue, a WALT issue, some rollover. So that was the Hungary story. We bought Hungary with a lot of rollover, and we've pretty much delivered on our business plan there. There might be some physical issues that need to be addressed. We've recently been doing a lot of work in sustainability. We got our LEED Gold certification on one of the 7 buildings we bought in Hungary last month, and we're doing a BREEAM in use certification. So that's another strategy, right? You try to take buildings that have good structural grid, good ceiling height, good locations, and try to, kind of, I don't know, just make them more buildings for the future. The last thing I'll say is this risk of obsolescence. I know Mike's got a whole business case on that, how in Poland you have assets built even 5 years ago, and I'll throw out our recent acquisition in Warsaw, Marynarska, which was built by a global developer, but probably looked more like it was 10 years old than 5 years old, right? So there's this risk of what was delivered 5 years ago as Class A, a risk of it obsolescing. So you really need asset managers and platforms on the ground that can get their hands around those issues and deliver the rollover leasing and the sustainability initiatives and physical improvements. And I think that's you're going to talk about secondary later on. I mean, I think it's a philosophical discussion, because what is secondary? We don't consider any of what our fourth fund bought as secondary, but it might fall into that bucket Mike talked about, right? That it's priced at a much higher price point.